Good evening. It is April 7th, Tuesday night. Stock and option trading webinar for members. And I will put this on a private URL when we are done over at YouTube so we can get back to it. I'll email it out. I'm going to cover just a couple things with the market in general, and then we're just going to go through some charts that I think will help you since they are popular stocks that I know people want to get into. So let us start with letting anybody in that needs to get let in. Okay. So Dimitri has been kind enough to work on the VSL for me, make it a lot prettier. I have broken up the growth stocks into three categories: large cap, mid cap, and small cap. So the large cap so far right here, I put them in alphabetical order because it makes it easier to deal with in the future. Mid cap, which is 3 to 15 billion, and companies that are over 15 billion but not yet in the SP 500, like the article we covered. And then small cap growth, and we'll add a few more companies to this list. And I came up with a micro cap list that is not very tall so far. And we can add, let's add 20 more rows. How about that? Yeah, there you go. They love us. All right, so this is all coming out here in the next week or so. I'm going to have track the ETF buys and track the stock buys. You'll have to do your own option stuff. It's just, frankly, it's too much work for what it's worth. Kind of like model portfolios. Everybody wants their own model portfolio. Admitting more people. All right, so the new VSL will be out. Now I'm going to add 3 or 4 companies. We still have companies on suspension. Boeing is on suspension because we don't know if they have to go bankrupt. Delta's on suspension because we don't know if they have to go bankrupt. And EPR Properties, half of their revenue, give or take, was from AMC movie theaters. And that is something that, that's the reason I put them on suspension, and somebody mentioned it. So I don't know if they're going to come off the list, if they'll get off suspension at some point, or what will happen. One thing I'm thinking about with Boeing and Delta is when their numbers come in and people realize there's not going to be any buybacks for a couple of years, these stocks really should drop a lot more. So, Boeing, I'm just going to put 100 in there for the bottom fishing because I don't know. In fact, let's just gotta tell you, everybody thinks when you cough now you've got the COVID, but the reality is that this is the time of year when everything thaws in Wisconsin, when all the mold and all the other crap starts coming out of the ground, and now everything's going to start blooming because it's 75 degrees here today, it was below freezing 3 days ago. So, the weirdness of weather. In any case, new VSL will be up shortly. Over at Fundamental Trends, I've prettied up the pages a little bit. Pretty pictures. This is the title I wanted to use for the valuation piece that I submitted to Seeking Alpha this afternoon. You've read it at Margin of Safety or at Fundamental Trends. But yeah, my preferred title was P.T. Barnum says, come into the big overvalued top, because the stock market is still overvalued. See that blue line? That's the drop. And we are still at a second deviation overvalued, which still makes us basically the third most overvalued stock market in history. Consider one more valuation measure, and that is stock market capitalization, Wilshire total market, versus the value of the companies. Now here you're like, I don't really have a good frame of reference. This is 1 year. So let's have a frame of reference. in general, the market is worth less than GDP. And since the age of quantitative easing, it's been above GDP. So either we have to print money forever, or at some point, things revert to mean. And I believe that with low interest rates and all the money, we should be in this area here just above versus just below historically. So I do think there will be a change, but we're not even to fair valued yet. So let's take a look at the valuation math. Took a look at estimates from Bank of America, from Invesco, from Goldman Sachs, Morgan Stanley, and I have my own. And the one thing I'll tell you about the industry is nobody really wants to get too far out there compared to anybody else. Warren Buffett called that the institutional imperative. Basically, stand in the herd, and you want to get to the edge of the herd, go ahead, but stand basically in the herd so that if something goes wrong, you say, look, it happened to everybody, right? So all these people in January with their rosy pictures for the year are all wrong, and now they're all telling you how to play this bottom. Does that make a lot of sense? So here I am, a guy who called the crash, who said it was going to get worse because of COVID-19. My estimates are that earnings in 2021 will be in the 120 to 130 range, which is what a lot of people are saying they should be this year. I think that this year, earnings will be under 100 on the S&P 500. So compared to last year, which was $163, I think it's important to recognize the reality that's in play here, which is that large portions of the economy are not going to open up anytime soon. And when they do, think about theaters and restaurants and all the other places where we normally congregate. And what you realize is that probably a lot of people are not going to go to sporting events, and not a lot of people are going to go to packed restaurants or theaters. We're going to maintain social distancing. So consider that a lot of places are going to operate at about half capacity at some point. I just think that we are really not considering the magnitude of the change of behavior that's coming. Ask yourself, are you ready to go into a theater? Will you be before there is a vaccine? I don't think that most of us are going to want to go to a theater at 7 o'clock at night on a Saturday, right? I mean, maybe I'll go during the day. Maybe I'll go to a movie right at the end of its run when I can, know that there's 3 or 4 rows around me that aren't being sat in. But you go right down the list. All these things are going to change. And then technically speaking, which we'll talk about in another spot, the market was going through a bit of a turn today, and we'll see what happens with that in coming days. So I introduced the term FOGAC to the general public. So we'll see if Seeking Alpha appreciates FOGAC, which is the fear of getting your assets kicked. So let's take a look at the S&P 500 on the one-day chart. It does not look overvalued. Relative strength index is here. But hey, let's look at the half day. Let's look at 4 hours. And what happened just after lunch today? It got overbought. And then it came down. And this market that was almost 1,000 points up today ended up like dead even, right? It was dead even. We had over 1,800 point swing today from top all the way back to zero. So what we are seeing now is the market turning over. And what that means is this daily chart may not get back up to overbought. It's in the middle of the market. And what do we know about middle of the market? It can go either way. So if this pulls down, then the one-day chart pulls down. And then we look at the weekly chart. This is the weekly chart. The weekly chart came off of the extreme oversold of a couple of weeks ago. and it's headed back to the middle. Nothing to say it can't go back down. Let's take a look. Let's stretch this out. When was the last time this thing was oversold on a weekly? You have 2009, right? But it goes down in waves. And if you think of Elliott waves, 1, 2, 3, 4, and it just keeps going in waves. I don't know how they would measure that. They'd look at the prices. So when you take a look at your wave patterns, they look wavy, right? Zigzaggy, wavy, depending on how you set up your chart. But then we had this fall off a cliff, which I warned you about late last year, that the market was set up to fall through the seller floor. Just from the structure of the market, how many buyers and sellers there were. So my belief is this. Either this market continues this rally, not so much on the weekly, but the daily could get overbought. And if the daily gets overbought, that'll drive the S&P 500 up to around 3,200. If it turns over now, then we're going to get that retest down here, yellow line, and then down here, and to the red lines. So we'll get the first retest at the yellow. I don't know what this orange line is. Did I do that orange line? I'm not really sure what that orange line is. Is that mine? Let's see, it is. Oh, there's a yellow. I know those two. Oh, I know what that was. That was this line. So we want to add a third red line on the S&P 500. That's that one right there. Yeah, everybody else is talking about something else. There's another level in here somewhere, and I don't know where it is right now. I'll have to double check. In any case, stock market is about to retest down here. Oh, I know what that line was. That was the new low. That's what that was. So are we going to break through the new low? Got me. Do not know. I think we're gonna. We'll see. In any case, one thing to consider on earnings for the S&P 500 is this. Do we think that earnings on the S&P 500 are really going to be awesome? I don't. I think that the earnings statements are still overstated, and it's going to get worse and worse and worse. So at what point does the public say, you know what? I want my money back. I'm just going to cash in. And I think we might have seen a little bit of that today. I know that I started selling some stocks at the middle of the day, and I was able to buy some puts on the S&P 500 right after the open because I just didn't see this day going better. I happen to watch the pre-markets pretty closely, and I've got a buddy in Puerto Rico now who sent me a text here and there, and another guy that I should keep in touch with. But earnings are not going to be 160 again. So we have to figure out what is the right level of earnings for the S&P 500. And the range from optimistic to pessimistic down here is somewhere between 2080 at the low end and 3,000 at the high end. And we're closer to 3,000 than we are 2,000 right now. So I just think that we need to be really, really careful. All right, I sent out that article talking about gold, and I think that you probably read that, right? There's an argument for having gold and gold stocks. But there was a good point made today by Goldman Sachs, which is that gold is not really strategic asset. So here I want to define something for you. Strategic is the pie chart that you look at that seems to never change. 40% this, 30% that, 20% this, 10% that. And it's what it's called modern portfolio theory. And it's what almost every financial advisor out there practices because it puts him in the group. If it gets screwed up, he can say, well, everybody did it. Strategic asset allocation is not really what we do. So when I give you the pie chart, and then I start telling you different ways to invest, such like this with the chart book, and at the bottom, remember I tell you that you have to do you, right? This is tactical in nature. So the ranges are strategic, but you picking 4% or 8% or 12% or 18%, that's tactical. And that's where technical analysis will help us at the very end. So we look at the great big trends, right? The secular trends. We look at government policy and central bank policy, Federal Reserve. Then we look at the fundamentals. And then finally, we look at these charts. And this is the last thing that we do that helps us know when to buy and sell assets that we like or short assets that we don't like. Now, I will tell you this. Something that people get wrong in their head is they think they can short or go against any asset that's out there. I will tell you this. I would never, ever bet against Google or Amazon or Apple or any of the stocks on our very short lists. Never, ever, ever. Now, I might not own them at a given time, but if I think things are about to get bad, I'll get rid of my assets that I want to keep long-term or have long-term temporarily, but I'll bet against something else like the S&P 500. So don't ever think that it's worth your while to bet against a stock that you'd prefer to own long-term. You're introducing mistakes. You're going against the long-term trend of what you like generally going up, and you're going to fight your emotions. So you don't want to do that. All right, so let's look at this chart real quick on gold. You'll notice I added a couple of extra indicators. I added a second money flow. I changed them both to 5-day. Normally they'd be longer, but I wanted them to be the same time frame so we could get kind of a good idea if they move similarly, and they do. So money flow index and Chaikin money flow are fairly similar. A little bit more vibration in the regular money flow. This is volume adjusted. All right. And this has more to do with, not the volume, the where they finish on a given day, where the price is more price weighted. So they all kind of similarly look to relative strength index. So relative strength index, if you're going to do nothing but one indicator, relative strength index is really the easiest one. It's what the most people use. And then you just have to decide if you want to start bailing a little before the 70 line or a little over the 70 line, right? And then you can use MACD for that. How strong is the momentum, right? MACD is momentum. If you only learn relative strength index and MACD, you'll probably be okay. I like the money flow indexes because sometimes I get what's called a divergence, where the index, the money flow, is moving in the opposite direction of the price, sometimes positively, sometimes negatively. So right now, with these money flows going up on the daily, you would expect the price to follow. But wait, there's more. The 4 hours started to turn over. So that means that by tomorrow, we might be seeing the price go down. So take a look at those futures before you go to bed on Bloomberg and again when you wake up. And what you'll find out is that we might be in for a great big downfall, or we might get another rally just because there's hopium. And I will address the hopium issue in a minute. So what we know is that gold is coming off of an almost oversold on the money flows, but never quite got down there on the weekly. So I switched over to the weekly chart. Gold has been pretty strong. If you change it to monthly, right, it hasn't been oversold in quite a while, right? 3-4 years. Even even when it got low, there was still some demand for it. So gold is one of those things that generally will have a narrow range until it gets to an extreme. Ultimately, I do think gold is going to 3,000, but there's probably all sorts of stocks that are going to quadruple in the same time frame, which is why I like the gold miners, because I think with the price of gold solid, for the most part solid, and rising over the next decade, those gold stocks could be fantastic because the supply and demand equation has done better. So I do think we should mix our assets, because early in the cycle, the price of gold usually will do a little bit better than the miners. But then after a while, the miners are dropping so much cash in the balance sheet that they do really well at the end. And you could weight a little bit more towards gold early and a little bit more towards miners late if you wanted to. So we flip over to the miners. What we see is on the 4-hour chart, they turned over today. Somebody mentioned in the chat room that they just missed the very top. On the daily, hasn't quite turned over yet, but look, it was overbought on this money flow. And then when you go back to the 4-hour, you see, so they were like, whoa, we're overbought, so they got rid of it. So you got to take a look at all these things, and generally, I will use the most bearish indicator in a bear market and the most bullish indicator in a bull market. Fair enough, right? Seems to make some sense. All right. So let's take a look at some stocks that everybody wants to own. Amazon. Amazon on the weekly. Never got all the way over sold, and I don't think it's going to. So we need to be aware that a number in the 40s for Amazon is probably a buy. Probably won't get all the way down to 30 on the relative strength index. This is the weekly chart, still headed up on the money flows. Just got positive on shaken. Let's see what's shaking on the 1 day. In the middle, pretty good. And then what happened on the 4-hour? Kind of peaked. So tomorrow morning, we will see if this turns over, it keeps heading down, or if it restabilizes and starts heading back up. What you should have seen with the S&P 500 chart and the Amazon chart and even the gold charts, which are less correlated, is that most of the stocks in the stock market are flirting with technical levels using Fibonacci ratios and other things like that say, hey, either you got to break through this or you're going to bust back down. And that's where we are in the stock market right now, is this level here. What did I say on the chat? I said if we get to 2710 and then up towards 750, which we did, 274, 275.15. So we got to 750 and then broke back down. So we'll have to see if we hold these levels, in which case we probably get a bit of a breakout, or if we break back down. I think we're going to break back down, but the market is controlled by traders right now, and a lot of wannabes, a lot of people who think they're traders, a lot of people who think that the market is cheap. I showed you early on, the market's not cheap. Earnings are going to get crushed. A lot of companies are going to cut their dividends. A lot of companies are going to announce no buybacks this year, maybe not next year. We know that the marginal buyer in the stock market was the corporations themselves. What happens when they stop returning cash to shareholders? That means the price of equities will go down. I think over the summer, I don't remember which investment bank I read, but they were pointing, it might have been Guggenheim, they pointed out the bottom will be this summer sometime. And I think that might be right. So we just have to be careful. If you want to trade a little bit, I understand. But small amounts of money, make sure you're doing high probability trades. And there aren't many of them on the long side right now. So let's go over back to Amazon. Where would we want to buy this? If it's weekly oversold down at, like in that 40-ish area, and that's as low as it got, 42. Then, Amazon in the 1500s or 1600s, I think you got to think about adding. Could it go lower? Yeah. This is December 2018. Still only got down a little, into the 1300s. So I don't know. I think you're kind of splitting hairs. Now, I will say, I'm not buying any of these big QQQ stocks. I'm not buying Google. I'm not buying Google maybe because of split ups. Excuse me. Again, allergies, no fever. Plenty of wet. My plan is to buy QQQ, and then a bunch of those stocks that I outlined in the article that are companies that will probably get added to the S&P 500 in the next year or two, and that should give them a big bump. So that's my strategy. My strategy is to buy QQQ for these big guys, maybe buy Google if it gets under 1,000, because I like that they're going to split it up over time. But otherwise, it's QQQ, and then really those stocks, those mid-cap stocks, and I'll add a few small caps as well. But just for measuring the market, again, weekly chart, Google got just down to oversold. If it approaches it again, you probably ought to buy it. So I don't know that Google goes much down below, 1,100-ish, 1,000-ish, right in there. I mean, again, you start to split hairs. But then again, why not just buy QQQ and get the basket? NVIDIA. This is one that's in the S&P 500 that I'm more likely than anything of the QQQ stocks to make an exception for. Why? NVIDIA has the absolute best artificial intelligence platform for building AI. And everything is going machine learning and AI. And so everybody who doesn't have their own proprietary R&D department is just using NVIDIA chips. A little Xilinx and some other things, but in general, NVIDIA chips. So NVIDIA is going to have a ton of demand over time. Another company that's going to have a ton of demand over time is Micron, but they're probably going to go through a little trough period here. But they are booked out for like 2 years. So you probably want to get a hold of them if you can. If we can get them back in the 30s again, we probably want to do that. So take a look at NVIDIA. Take a look at Micron. Again, Micron got oversold, got down to 32-ish, 31-ish. Honestly, we probably should have had a limit order in to buy it right there. So that's, I missed that one. That's such as life. Generally, you get 2 swings. So I don't think putting a limit order on NVIDIA or Micron around 30, 32 is a bad idea. Set it a little higher if you don't want to miss, a little lower if you don't care. Stocks that are in the SP 500 but not QQQ, companies like Northrop Grumman, I like them a lot. If they get down here to where our bottom fishing level is, down in that 245 range, 250-ish, where to get down to, almost, look at this. I said 245. It got down to 263. That's pretty close for, I made that projection when it was like, 350 a share. Lockheed Martin, same thing. Some of these stocks, I think we have seen a rough bottom, plus or minus 10%. Lockheed Martin got down to 285. Low 266, and back in the day, I said 224. That's pretty close. It was, it was way higher before that. So these bottom fishing prices have been pretty good, and I think you have to not be committed to like, I got to get the bottom fishing price. Certain stocks they're going to be off a little bit. Sometimes support kicks in a little sooner because of the crowd. Sometimes a little later because of the crowd. It's all sentiment based, right? Visa and MasterCard, I forget who it was, but somebody set an order on this one and got it like almost at the exact low. Who was that? Somebody. Is anybody here? I don't know. All right. MasterCard, same thing. Probably that's their low. So a lot of these super blue chippers, go take a look. That doesn't seem right. That doesn't seem right. MasterCard. Okay. What's the symbol for MasterCard? All right, who's smart? Oh, MA. Gosh darn it. Let me. All right, so this got down to 199. What did we have for the bottom fishing? Oops, wrong one. 259. It got way below. Oh no, 231. So again, we got close. At the end of the day, you have to use these technical indicators if you want to be more precise. So we've been fairly accurate, right? We've gotten the big picture right. But if you want better entries, you have to learn this stuff and start to get a feel for how these indicators move with each other. This one is 3 different exponential moving averages. And when they all cross over at the same time, you get down here or up here. And that's a very strong indicator of momentum. So we know that the momentum is down because of this. We also know that it's about to start sloping back up because of this. See how it's curving? It's bottoming out. And these are starting to come off. So as far as the time frame for the S&P 500 making a decision, I think by the end of next week. I think we will know relatively soon whether or not this stock market is going to retest now-ish, right? Next week, 2-3 weeks, or May. If we're going to be heading towards retests and maybe a new bottom, we're going to know pretty quick. And if this market's going to go back up to 3,200, I think we're going to know that pretty quick too. So here's the problem with the market moving this fast. If you're going to stay invested right now, you're guessing, and you have to be comfortable with guessing whether or not it's going to go up or down. I'm going to tell you why I think it's going to go down. And I hinted at it on the chat board today, and I put a question up there. I'm looking for some information, and I'm sure I'm going to get it because I asked Statista to look it up for me. I'm sure they'll make me subscribe again, so that'll cost me $700. But Statista has all the numbers. Here's the number that I want to know. I want to know in New York and in the United States as a whole, how many people died in March. And I want to compare that to the number for 2018 and 2019. And I want to see what the difference was. Because the difference is going to be basically all COVID deaths, 90-ish% COVID deaths. The change from 2019 to 2020, unless there's a hidden disease out there that we don't know about right now. My belief is that COVID-19 deaths are being dramatically underreported, and that deaths due to hospital stress are happening as well. So if I'm right, we're going to get bad news on the COVID front at some point. Because I've put it out there, and I know I've seen it talked about for Great Britain. The number of deaths year over year by the month in Italy and Great Britain went up fairly substantially. Somebody put something on our website, and I don't know that it's true because I read something else as well, so I'm going to have to double check. But we don't know how pervasive COVID-19 is right now. But we're pretty sure that it's more than the numbers that are getting reported, right? I think we basically know that. We just don't know how much. And the other risk that I'm afraid of is that President Trump and his cadre of billionaires and financial people are going to get the economy opened up sooner than it should be. And we're not going to bend that curve over like I talked about 2 weeks ago that we needed to do. The economy should not start to get opened up until around Memorial Day. And that's if the curve is sniffing dirt. And I don't know if that'll be the case. We just have to wait and see. But if they open up too early, a second wave is virtually assured, and then we'd get a double dip. As far as healthcare stocks, take a look in the small cap. There's a bunch of gene editing companies. Take a look at those. I don't know if there's anything really in here. At the moment, by the way, I do not own Travel Centers of America, but I am looking to get back in. Think about this. Travel is going to be down this summer. They're probably going to get beat up. They might have to dilute. So if you have Travel Centers of America and you booked a profit a while back and now your shares are back to even, I would just get rid of these shares and wait. I think it's a great concept. I just think this is going to mess them up for a while. But yeah, all of these small caps, they're already in the list that's out there for you. Anything that's on here is worth looking at. I mean, people ask me for companies. I mean, there's 21 of them here in the mid cap, 24 in the large cap, 14 in the small cap. How many companies do you need? I mean, I've done legitimate research on all this stuff, and I'll add them as I get them, but, I'm not going to add stocks that I don't know anything about. So, in any case, the market's kind of in the middle right now. It was going up until after lunch today, and then it turned down sharply. When things turn down sharply, that's usually a bad sign. We can take a look at Bloomberg and see if they have the futures numbers up yet. Futures, not really doing anything yet, kind of evenish. So there's a tug of war. Look when you get up in the morning. I don't know if this is going to run to 3,200 in the next month or if it's going to start breaking down in the next couple of weeks. I don't know. There's not clear indicators right now. It's almost kind of a 60-40. 60-40, 60% it heads to the lows again, and 40% that it sniffs 3,200 first. And that's actually somebody else's Bayesian mathematical model that I think is probably pretty close. In poker, we talk about knowing which side of the 60-40 you're on. I think you're on the side, the 60% would be taking profits right now. You may or may not want to buy any puts like I did. But I think if I'm right about this market structure, I'm pretty sure that I am, that these traders just don't have enough juice to push it up any higher because the other traders are looking at each other like, well, I don't want to be the next one to buy. So any bad news is going to drive this market down. I don't know if what was I going to say? I don't know. Oh, Boris Johnson. I don't know what happened to Boris Johnson. Anybody know? No? Yeah. All right. So somebody put an FYI. According to the CDC, New York deaths in March of 2019 were 26.7 thousand, but this March they were 32,000. So that is a 5,300 death difference. How many deaths did they report due to COVID-19? So that's the other thing. Were those two numbers in line? Is it right around 5,000 or 6,000 deaths in New York? Right? $5,400 deaths in New York. Well, so then it looks like maybe the COVID numbers are pretty on the money, right? But that's what I'm watching. I want to see if they're underreporting. If maybe the doctors, they just don't feel any political pressure, and maybe I know that they're allowed, the doctors are allowed to put down COVID-19 on a death certificate even without a test. So maybe they're doing that. The other thing to take a look at is somebody brought up, are we underreporting the flu? But my understanding is that flu reports are up. So one interesting stat, and I put it on, where did I put it? Did I post it? I have a chart. Yeah, it's on this chart. Everybody else has to log in all damn time too, huh? Yeah. So on this chart, this is what got me thinking about, are we underreporting the deaths? So average deaths per day by all causes 2019, about 8,000 a day. I wanted to see if that was the same this year. So a number of total COVID-19 deaths through April. Yeah, I might have to take a look at these. Deaths per day. See, that doesn't look right either, does it? Maybe this is the whole world. I don't know how to read this. But I want to know what the real death rate is, because I don't think we know that yet. And I'm curious to know that Hammer article that I put out there, how far down are we going to push COVID before we open up the economy? I would like to err on the side of keeping it closed a little longer. Same reason I'd like to put less pollution in the air. Better safe than sorry. But I am concerned that we're going to get ourselves into another big mess by not acting as serious about this on the tail end any better than we acted on the front end. You know, I put out that tweet on January 22nd that this was the most important story in the world, and the president picked it up for a month. He knew a month before me at least, and I'm still irritated that we didn't take stronger measures on the front end. I knew when I went to Puerto Rico that this might catch up with me, and when I went to Arizona. And I feel like I just outran it. But this is not an unserious thing, and the impact on the economy is so big that I think almost universally it's being underestimated. So, you know, I think that stocks are supposed to come down anyway. I think this is going to make it worse, and certainly it made it faster. So if the market goes up to 3,200 by next Friday, you just have to live with that if you're not in, and let it come back to you. So either it goes up and comes down, or it turns over now. Who knows? But we'll know shortly. But by the time, you know, you have another one of those 2,000 point up days, it's not going to matter to you. You just missed a day. So you can guess. You can trade options maybe if you want to, if you're super aggressive and understand what you're doing. But I think that buying call options is expensive right now. I think buying put options is expensive right now. And I just think the easiest thing for most people to do is focus on the companies that you want to own coming out of this and look for those spots. And then you have a good idea. But yeah, keep looking at the death rates and everything else. Are we really reporting? Are we being honest? That's all I'm asking is, are we being honest? Because there's a lot of people who somehow got motivated on politics with this. You just need to be honest and say, okay, this is what's happening. And then make your adjustment. How low does it go? Does it stop down here or doesn't it? Let's see if that holds on. That should be, I understand why it's there now, at least. That's good. All right. So anyway, I'm not going to take any questions. So you put those in the chats and the forums. But the market's in the middle right now. There's not a lot you can do about it. All right. Have a good night, everybody. And I will see you on Friday.